crypto correlation to risk assets remains high, and geopolitics drive weakness in markets. Options markets finally price in some risk premium, and skew goes bid for puts again as people rush for protection. All this and more in this week's Crypto Insight. So crypto this week, as suspected, crypto remains strongly correlated with risk assets on the latest down move, rejecting key resistance levels and failing to provide any safe haven properties, as some have touted that it actually has. Okay, many Bitcoin advocates are saying that the digital asset in today's world should be more desirable than gold due to its portability, its continuous trading hours and liquidity, and it being hard to seize. Okay, the trouble is the price action is telling us something different. Okay, and it's telling us that the marginal investor determining the short-term price movement are treating Bitcoin like a high beta risk asset. Okay, now it's also reasonable to assume that the incredible price gains since March 2020 have been largely attributable to loose financial conditions. And as the Fed is forced to tighten to calm inflation, this will impact prices negatively. So that dynamic, that underlying tightening of financial conditions is going to keep some pressure on crypto for, a large part of this year. Now, that's not to say we can't have periods of rallying, and, maybe we do get one soon, right? For those who have watched my Bitcoin cycles video, some seasonality suggests we may be in for a 2-3 month move higher in crypto. But let's be clear, it's going to be a tough year for crypto, and don't be surprised if you haven't seen the lows of the year yet, basically. Yeah. All right. Now, if we then look at kind of the flows, okay. So we start to see a turn in ETF flows with some institutional buying, okay, recently, and that might explain why we haven't actually retested the January lows yet. I mean, we pretty much got close to the January lows in equities, but we haven't managed to do it in crypto. So vol adjusted, I would say crypto's holding up pretty well, right? Even though it's been going down lately, vol adjusted, you would have expected it to be dropping much more dramatically, right? So maybe that's because we are seeing some buying flows coming back in. Okay, now the extreme overreach from Canadian authorities in response to the Freedom Convoy protests in terms of freezing funding channels sparked a huge influx of crypto donations. Okay, so those who've been following that story, like $1 million worth of donations were suddenly raised in crypto when Canada started freezing people's accounts. Now they've then gone and doubled down and basically made those crypto wallets illegal to transact with. Okay, so they've issued an order against those crypto wallets. So it's going to be very interesting to see, it'll be an interesting test to see the government resistance that crypto really has. Okay, if self-custody Bitcoin in theory is supposed to give you the ability to kind of circumvent governments, right, and their restrictions. So we'll see what happens on that front, but it's definitely it's going to test the use case, that people have been calling for in crypto in general. Okay, so definitely keep an eye on that. In terms of Ethereum, so Ethereum's kind of been trading in line with what Bitcoin's been doing. Resistance band was that 33, 34 area, rejected, rolled over. Now I'm seeing 2400 as a pretty important support level right now, which if it breaks, the downside can go as far as 1700. I'm not calling for that right now. At some point later this year, I think that's very likely. Right now, I think we're getting pretty close to exhausted on the downside, but those are the levels that I'll be keeping an eye on. That 2400 level is pretty important. Okay, so for me, I think we're close to putting a short-term bottom. Sentiment's pretty beaten up. speculative length has been largely unwound on Russia fears. That's what the latest sort of bout of weakness has been. I've started to take off some hedges to prepare for a more meaningful bounce into March and April, right? So I've been pretty well hedged in my crypto recently. And now that we've come off in a meaningful way on the back of this Russia stuff, I have started to take those hedges off. I haven't really added any speculative longs yet, but we'll talk about the ways you could do that if you were that way inclined when we talk about the volatility analysis. What else? On-chain. So if we have a look at the on-chain stuff, key takeaways for me on the Bitcoin on-chain metrics this week. So number of active entities is still languishing at the lower end of an upward sloping channel, okay? Suggesting that many short-term players have thrown the towel in, okay? So this, that slow upward sloping trend is kind of the more hodlers coming in over time. But, you can see on that chart on the top left that when you get into like proper bull market territory, then, you see more users come in basically, right? And you haven't seen that, right? And it's just languishing down at the lows, okay? So suggesting there's not a lot of short-term speculators playing that space at the moment, okay? Which is quite good really, right? It means prices have potentially got some room to run higher, yeah, if they were to receive a positive catalyst, okay? Short-term cost basis, if you look at the short-term holders, that is kind of in the region of 42K to 50K, and has likely led to some panic selling on the Russian fears, right? So these red bars, this top-heavy short-term holder supply has probably partially been, liquidated out on the recent move down, right, over the weekend, okay? Losses held by the short-term holders in proportion to the Bitcoin market cap is around 18%. In proper liquidations, that can go beyond 40%. Now, you can see that's the bottom left chart. That red line can get as low as 40% in a real liquidation, a real kind of cleansing move of the market. But, we may have already seen, we may be done. There may be one last leg down where we actually get to that, but it's not a guarantee that you have to get to that 40% level, basically, right? So just kind of something to keep an eye on. But the fact that we're already at 20 may be enough, yeah? And then the last thing is the futures basis curve is quite flat. That's this sort of pink curve on the right, suggesting the reduction in leverage in general, right? So you've got the longer term futures basis around 5%, and you got the really short term close to 0, right? And it was very, very negative a few weeks back, basically suggesting a lot of shorts in the perpetuals, right? And that's why the market had room for that squeeze, and we did see a bit of a squeezy move, right? That's all kind of gone away now, suggesting less leverage, okay? So it feels like the market's a bit cleaner, basically, in terms of crypto, right? Which I think in general is a good thing, right? And makes me slightly more constructive on prices, yeah? So then if we look at crypto vol, so here we've got realized vol numbers, okay? So we're seeing significant implied realized spread, which we haven't seen in a while. The short dated implied spiked on the Russia concerns, and they've gone above realized, right? So typically, most of this year, we've been seeing implieds trading at discounts of realized because the DOV selling has compressed implieds to a point where they're too cheap, okay? Now, here, we had a special case where you had some exogenous event that made people fearful. So even though the realized, which is the blue line, hasn't exploded higher, the pink line has, because people want protection, want optionality, because they're scared of a large move, okay? So this is something we haven't really seen happen in crypto vol for a while. Now, the term structure, you can see inversion on the market sell-off is pretty similar to what you'd expect to see in equity vol, right? And what we have seen in equity vol, right? Given that the realized hasn't really exploded, I would expect the front end to fall back pretty quickly, especially on a rally in spot, right? So you've had spot down on these fears, vol spikes, goes inverted. If we stabilize to rally, that front's going to get creamed, right? I think that's pretty standard price action for vol. Don't be surprised if that's what we see in the next week or two, okay? Now, the longer term vols, as you can see on the charts on the right, so whereas the pink line has spiked quite hard off its lows, and I've gone back, kind of around 4 months here, 4 or 5 months, to just kind of give some context of where vols are. The pink lines jump pretty dramatically, right? So short end vol has spiked quite a lot on this recent downtick, but longer term vols remain pretty subdued. Okay, and it's hard to see them picking up without a catalyst, such as, you know, some serious buying flows in the medium part of the curve, like June out, because people really want to put some, you know, some premium to work to express a view, or we get sustained higher realized, right? If we don't get either of those, then these longer term vols, I think, are going to just stay pretty subdued, and they're not really worth owning, to be honest. Yeah. Now, long calendars do look attractive for bullish plays, right? So whereas, you know, this white line, which is your 6-month vol, might not be an own, you know, owning some April and then selling some 2-week stuff against it, given that the curve has gone inverted, that's probably a nice way to be long the market, right? So if I had to be long the market right now, that's the sort of trades I'd be looking at maybe owning 30 delta calls in April, selling maybe 20 delta calls in early March against it, taking advantage of that inversion, bringing some premium back in through the door, and having a nice positive, positive carry way to be long, basically, right? So that with limited downside risk, right? So that would be the trade expression, to be long in an efficient manner right now, given the shape of the curve. Yeah. Okay, so that's what the term structure is saying to me. If we then look at skew, naturally the put skew's caught a bid as the Russia fears have escalated, right? So you see here, so early last week, the skew had all converged close to zero again, or not quite zero, but around 2 vols puts. So come in quite a bit, and it's all expanded again back out towards puts, particularly on the weeklies, right? So no big surprises there. Typical price action that we see when people need to rush to hedges and stuff like that. Okay. Now 6-month skew, which is the white line, hasn't really reacted, you know, much, which suggests that there's some demand for longer dated upside calls still. Okay. So that's, yeah, and we've said that, right? If you're going to buy options, you're going to buy call options, you're going to buy them longer dated in crypto right now. Yeah, because in the short end, it's just, yeah, it's hard to see the catalyst, right? Now, I'd say given the move in short end vol, given the move in skew, put spreads, if you need hedges still for your crypto, put spreads are likely the more efficient hedge in the short term, because they bring down your vol exposure and they take advantage of the higher skews that we're seeing, basically, right? So that would be, you know, I've had some risk reversals on. I started to buy back some of the calls down here, and then if I still need to keep those puts, I'm kind of selling lower strike puts against them to leg into put spreads, right? So keep some protection on, but take advantage of the fact that skew's elevated, and also my conviction of a sell-off from here is kind of decreasing. Okay, so that's skew. And then options flows. So flows haven't been too exciting this week, to be honest. So Bitcoin, nothing really of note to mention. I would say that in Ethereum, the usual DOV flows have been there for 25th of Feb expiry this time. But the only real sort of big clips outside of the front end to note are the June 7,000, 10,000 call spread, right, which traded in some decent size. And there was some speculation that that was just a rolling down. So someone who had owned the 10,000 calls was rolling them down to the 7,000 calls for June. Okay. And that's really the most significant flow that I saw in kind of the paradigm stuff. Okay. And then the last point to mention again is these DOVs, right, which are obviously going to dominate crypto vol for the foreseeable future, as they are likely to keep growing. And if you look again at what happened in the DOV auction, it continued to print the lows in weekly vol. Okay, so every time into that auction, we're seeing front running from market makers where they smash the vol down, they get themselves short, they try to have market impact, so then they can then scoop up the DOV vaults at those lower vol levels and lock in a profit, basically. So you're pretty much consistently seeing lows in weekly vol around those DOV auctions. Okay. Now this week, some short squeezing took place, right? Because apparently some of the market makers had oversold the vol and didn't actually manage to buy what they wanted to buy in the vaults, right? There was some mess up with I think it was ribbon or something, right? The ribbon auction. And so that meant that they'd sold a load of vol, which they didn't get to buy back, and they were left short. And then the market suddenly started to move because of the Russia stuff. So that created a bit of a short squeeze. And you can see that weekly vol hit a low there on Friday, and then it started squeezing, and it's been going up ever since, right? So it's gone from a low of kind of 62 and it got to highs of 90. So some market makers might have got a bit run over there if they had been front running that and not managed to get their vol back, right? And that is always the risk that you take, right? If you front running is not a word people like to use, right? Because technically it's considered kind of illegal or whatever, right? But certainly in developed markets, but in traditional markets, right? But if you pre-position for flows that are regular and predictable, you're always taking the risk that the short positioning, the short gamma that you run, if the market suddenly starts to move, that can hurt you, right? And I think that's kind of what happened this week. So whether that reduces market makers' appetite to front run those flows for next week remains to be seen. It might well have some impact, right? So we'll keep an eye on that this week and see if the vols don't collapse quite as quickly into Friday. Okay. And that's kind of it for this week. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.